welcome to the first live show of 2026 of You and Your Money. For those watching for the first time, I'd like to briefly explain what the program is about. You and Your Money is now entering its 23rd year on Business Day television. Over a 6-week period, it covers a range of key financial topics, including investments, estate and tax planning, financial, retirement planning, healthcare, and short-term insurance. I always like to use this first live program of the year to provide an overview of what has happened in the investment world over the last year, as well as to share some thoughts of the year ahead. Global and local markets have delivered remarkable performances over the last 3 years. And if you go back over the past 5 years, only 2022, when markets declined by approximately 22%, dented what was otherwise a strong overall performance. This is precisely why we as wealth advisors emphasize to clients that investing in markets requires a long-term perspective. I'm Bryan Hirsch, and this evening we are focusing on the investment world, and joining me this evening is David Shapiro, Chief Global Equity Strategist at Sasfin Wealth. David, lovely to have you on the program. David, in my opening remarks, I referred to market performance as there is a famous quote, lies, damned lies, and statistics, which reminds me how easily numbers can be presented in ways that mislead or distort reality. I believe this perfectly captures what we have seen in global markets in recent years. While headline indices have delivered impressive returns, much of this performance has been driven by a surprisingly small number of shares. A handful of large companies have contributed to this very proportionate share of overall market gains, creating the impression that markets have performed uniformly well when market shares have lagged. This concentration of performance is important for investors to understand because it highlights the risks of assuming that strong index returns automatically means broad market-based strengths. So David, I know we've spoken about this for a long time, and obviously we've seen great percentage returns, but that hasn't translated across both global and South African markets.
I'll try to be brief, but if we look back on the comment that you made about 2022, that was the year in which Jay Powell, who's the Fed chairman, recognized that inflation wasn't transitory. That was the word that he used as we came out of COVID. And he suddenly realized this is real and put up interest rates in the United States from 0 to 5.5%. And I'm simplifying it. And as a result of that, the markets came crashing down. There was one thing that saved us and has saved us and continued to save us was ChatGPT. I used ChatGPT to introduce artificial intelligence, which has dominated the markets for the last couple of years. And when you said investment was concentrated, it was what we call the Magnificent Seven. It was slightly bigger than that. A handful of tech stocks that really drove markets up. Take those away, there wasn't anywhere near the performance. I'm going to relate that as well to the South African market, which had an incredible growth record last year, where the market was up phenomenally. Why? Handful of gold shares, because the gold price went up, platinum price went up. So once more, it was concentrated on a handful of stocks. Take that away, the rest of the South African market was modest.
And global markets.
And global markets.
And global markets.
Yes. So you did right in the way that you described it. It can be a handful of shares, but sometimes that's how markets operate. I think we're going into a much broader view in 2026. I think markets will broaden out as we start to see the benefit of rate cuts. But there still will be patches of areas of the market that actually dominate.
Okay, so let's move to another concern that South Africans, or something South Africans are totally puzzled about, the rand.
Yes.
When we had our last program, which was November, we spoke about the rand being 17.50, and we discussed, is this a good time to take money out? And we both agreed, not a bad time at all, when you considered what has happened. Well, Fortunately, if you did take money out and you're now saying, hold on, at 1650, I'm not doing as well, the corresponding uptick on the international markets has really been neutral in terms of value. You haven't lost, you haven't gained, but you do have the funds offshore. So now, David, now the pundits are talking below 16 and into 50s.
That's all because of one particular theme, and that's concerns about the US economy. I'm not concerned about the US economy. In fact, I might have in our last program described the markets as a two-lane highway. You know, the one lane being artificial intelligence, which continues to draw in investment, and there's some remarkable performances that come out of tech stocks related to AI. In fact, my theme for this year is the adoption of AI. I think more and more companies are going to adopt it, monetize it. So that's the one highway. The other highway is concerns about the US economy, their debt. And this goes back, the rand's strength comes from dollar weakness. And to try and explain it in one sentence.
Although, Dave, we have seen the rand, we strengthen against euro and sterling.
Yes.
Not as much, but certainly a 5-6% appreciation
a lot of that
compared
is,
to a 12%.
Yeah, a lot of that, there's reason for it, because there has been the view that if you're going to get out the dollar, and I explain why people are getting out the dollar or why they wanted to get out the dollar, one of the reasons is that they didn't really want to go into the euro because, you know, the European economy is not exactly running away, nor is the UK. The Japanese economy is very difficult to read. So a lot of investors, instead out of the dollar, went into gold. And when gold became too expensive, they went into platinum. So we've seen remarkable runs in both of those. There's also been a view that you should go into emerging economies, and the one proxy for an emerging economy is the rand. Because of our history of well-managed financial markets, investors come into our market. Also, there have been some very healthy returns, which we've discussed as well. But why did the dollar weakness? All because of fear of Trump. You know, he started in April last year.
The 2nd of April, Liberation Day.
And people got very worried. His whole thesis was that if I put up tariffs, we're going to get these tariffs. With the tariffs, I will reduce taxes. You know, that was his plan. And that was a little convoluted. No one quite believed that it was going to be that easy, because he has reduced taxes, or alternatively, 10 years ago, he reduced taxes, and they were supposed to expire now and go up to their previous levels. But he's continued that. He's made these tax reductions permanent, as well as a lot of other concessions. So, to put it very simply, there were worries about what Trump's policies would mean in the long term for the dollar. People said, okay, we'd rather put our money elsewhere. And that's why you got a lot of central banks, a lot of investors seeking alternatives to the dollar. But that's a separate market to our AI market. That's the bond market and the currency market. And no one knows where the rand can go, because overnight, his attack on Powell, Trump's attack on Powell, well, not directly through him, through the Department of Justice, subpoenaing, I can't get the word.
Don't worry, we've got the
subpoenaing. It's early in the new year, Bryan. For money that he spent on redoing his building, the Fed building, it's been a big political battle. Powell has come out now, which you don't see, and he's attacked Trump, saying this is politically motivated. Bryan, investors do not want to see government challenging the independence of the Fed. That scares you away. Remember, we've had it here as well. So that's why the rand can continue, as investors very nervous of what's going to happen between the Fed and government. Very nervous about what that is. So, okay, let's go hedge into gold, or let's hedge into platinum, or somewhere else, or outside of the dollar, which helps the rand.
So to put you on the line, I can't let you talk without putting you on the line. Where do you see the rand in the next 6 to 12 months?
Well, I would imagine that we'll reach a peak, as we've seen with gold and platinum. We saw it with Bitcoin. Bitcoin went up to $127,000 and has come all the way back to 90. I think there comes a point where it exhausts itself. So I would imagine that you would find the dollar steadying and the rand kind of losing a bit of ground. But we could get to 16, in the short term, as these worries continue.
If the markets do retrace, and if there is a bubble, how will it affect the rand?
This is not a bubble, okay.
No, but I'm
Okay,
just
you mean
asking the question.
you're talking the rand?
If you had a collapse in markets for a period,
Yes.
is it likely the rand will then weaken?
Yes.
Because money will then be taken out, and
yes, there'll be fear. Yes.
So you've got that upside.
Yes.
So David, I'm now an investor.
Yeah.
Coming to me, and I'm coming to you now, saying, David, we want investors' money. Do we take it offshore? Do we leave it onshore? Do we buy South African shares? Do we take it offshore? Remember, I'm a growth investor.
Yes.
If I'm looking for income, I'm going to stay in South Africa because income is still a lot higher than anywhere else. But if I'm looking for long-term growth, and I'll take about the last 5 years have been phenomenal. The average has been about 14 to 16%, taking into account the high interest rates in 2022 and the drop in the market. What are you doing with the money?
I'm staying where we were. I still think that AI is going to gather momentum, and it's certainly evident from the developments that are taking place now. There was a very important deal between NVIDIA and Siemens, and this is the first deal that wasn't data center related. Okay, and Jensen Huang, who runs NVIDIA, said that this deal together with Siemens is they bringing these chips and bringing AI into the Siemens businesses, which are automation, autonomous factories, things like that. So this is the first deal where it was business and NVIDIA bringing AI directly in. Up to now, it's been all about data centers. The data center market, if you listen to Jensen Huang once more, people have been talking about a bubble. He said in his talks, he said, in fact, it's the other way around. We haven't got enough data. We haven't got enough data centers. We haven't got enough power. So I think that the market is beginning to realize this is no fad. This is real. And this is going to continue to drive economies. And it doesn't matter whether China is a competitor. There's enough for everybody, to go around, for each country or each area to do their own thing. So it's not a competition. It might be a competition for who's got the better chips, but I think AI as well is going to attract a lot more investment. That's the one thing. So that theme continues. It doesn't mean that shares are going to run away, Bryan. I think they still need to do a bit of digest some of the excesses there, and they'll still do well, but maybe not like they have been done in the past.
Let's come back to the after the break, because I want to talk to you about that, and I also want to talk to you a little bit about AI. So we're going to take a short break. Stay tuned, and we'll be back shortly.